Good evening, everyone, and happy Sunday night. This is the first time I'm coming to you on a Sunday night, but I think there's something that has happened in our market that is extremely remarkable. And the Federal Reserve just cut interest rates by 100 basis points. Now, that's one full percent, and that's on top of the cut that took place last week. And this is another off cycle cut that took place ahead of its originally arranged meeting that was due to come this upcoming week. So, what signal does that send to the market that interest rates are being cut again and so drastically? Right now, the Federal Reserve prime interest rate is between 0% and 0.25%. This is the level that we saw during the Great Recession, during a great time when we had a significant financial crisis in this country. We're back to that level in monetary policy again today so quickly from coming from um, monetary tightening in this country, where we were saying we were really in a point where we were over exuberant, or the economy was growing in such a strong manner that the crutches of monetary policy were not needed. So, what shifted in such a short amount of time to cause the Federal Reserve to react in this manner? We all know about the coronavirus, and we all can see what the coronavirus has done to our economy and the role that has played in adding volatility to our market. But is this truly the catalyst and the only catalyst that the Federal Reserve sees that it's causing them some cautionary stances when it comes to our monetary policy? I want you to leave a comment below and let me know how you feel about the shift in the movement that our economy or that our government is making, the Federal Reserve is making in reference to monetary policy. Currently, where we are right now, China has seen a reduction in the amount of new cases in the virus. About 10 weeks in, or going into 11 weeks in, since the virus has went public to the global theater, China is at a point where they're able to start re-emerging commerce in their economy. They're at a point where they're able to reinstitute the Chinese Basketball League on the same date that we were able to suspend the NBA season in the United States. Additionally, as of Friday, I believe there was only 16 new cases in China, mainland China, of the coronavirus. Now, as it seems like they're starting to come to a point where the virus is starting to slow down and starting to come to a head, where's the rest of the globe at? Where's the rest of the economy and the global economy, and how do we stand in that respect? The stark differences that we see between the United States and China right now is that China has not implemented any fiscal or monetary policy as of yet in response to the coronavirus. The opposite is true for the United States. We have implemented monetary policy and fiscal policy as a jumpstart to get ahead of what we foresee will happen in response to the coronavirus. Now, is this something that is necessarily needed right now? Um, was it truly needed, or is it truly needed for the Federal Reserve to implement monetary policy before we even see the economic fallout that will take place from the coronavirus? So we have a stark difference between the approaches that both countries are taking towards satisfying the coronavirus. Similar to the United States, Japan has also instituted a monetary policy and drastic changes in their monetary policy to get ahead of the potential economic downfall. Now, I do believe that we will have a significant hit to our global domestic product in the United States as a result of the lack of commerce resulting from the coronavirus. Most recently, the CDC just reported that they recommend all events that will have at minimum or a max of 50 members or more be canceled for the next 8 weeks. Now, that's a significant move that the CDC has authorized across the United States. We already have many states that have went online at the university level and it has suspended school for at least 2 weeks at the primary levels. If this plays out for the next 8 weeks, that would be the next 2 months that kids will not be in school in the primary levels in our education. That would be the next 2 months that we will have many stores, that we will have entertainment, and many employees and employers in this country with a lack of productivity and a lack of commerce exchanging hands in the United States. That will create a significant dent in the gross domestic product or in the GDP of our economy. So many of you say, are we leading into a global recession? And I wholeheartedly believe that it will be hard for us to not go into a global recession after taking a significant hit to our GDP such that we are in right now. It is very possible that this month, the month of March in 2020, will be the first month or the recognizable month and where we'll be able to measure that we are in a recession when we look back on it. A recession is defined as 2 consecutive quarters of negative GDP. I think we will significantly see that definitely in the first quarter. Is a high probability that the economic impact that will take place as a result of the coronavirus will allow us to see negative GDP in the first quarter of 2020. I believe that impact will further and carry on to the second quarter of 2020, giving us the economic and the definition of a recession, making it real in our economy. So I ask you, if there's any questions that you have out there, please raise those questions, send them to me now. Let me know if there's any thoughts that you have about our economy, everything that's going on with our GDP, everything that's going on potentially with the unemployment rate changes that may take place, potentially with incomes that may take place, and potentially with anything about unemployment insurance in our economy. There are a lot of changes that will be coming, and they're going to be coming fairly fast. As a result of the changes that the Federal Reserve committed tonight, we do see that our futures are trading remarkably lower again. So we're in for another week of extreme volatility in the financial markets. As of now, we have a total of 167,000 confirmed cases worldwide of the virus and a little bit over 6,440 deaths, unfortunately. But the positive is that we're seeing a lot more recoveries. There's about 76,000 recoveries, and this is based on the Johns Hopkins University map that I have behind me. So overall, I think we will be in a holding period when it comes to the economic and the financial markets for the next 6 to 8 weeks in the United States. Once we get past this holding period, we'll be able to assess essentially what the carnage is to our GDP, what the damage is to our economy, and how long it will take to get our economy back online and back moving forward in the way that it was prior to this coronavirus. As always, if you have any questions about the economy or anything that takes place in the financial markets, please reach out to us directly. My name is Paul Zachary Shelton Jr. I am the Chief Investment Officer of Warwick Shore Advisors, and we are a wealth management firm located in Orlando, Florida. I look forward to hearing from you. If you have any other questions, please reach out to me directly. Leave a comment below in this video. You can reach us at investments@warwickshore.com. Thank you so much and have a great day.